Well, many student loan borrowers right now, they're scrambling to prepare for repayments to start again after the Supreme Court struck down the Biden administration's plan to forgive about $430 billion in student debt.
Now, in response to the decision, the White House has announced a more affordable income-driven repayment plan called the Saving on a Valuable Education Plan. CNBC senior personal finance correspondent Sharon Epperson joins us now to break down what this means exactly. Sharon, good to see you. First off, we know that student loan payments, they've been paused since early 2020. So when will borrowers have to start paying again? And can they expect any relief from this administration's plan?
Well, they're going to have to start repaying in October, and they will also have interest start to accrue starting September 1st. So, yes, there is this new repayment plan that people need to know about. It's a new type of income-driven repayment plan, the SAVE plan. And if you're already in the repay plan, you'll automatically be enrolled in this. But it works like many of the income-driven repayment plans in that you pay based on your income and your family size. In this case, it will eventually reduce the amount that you have to pay from 10% of your disposable income to 5%, which is significant. And the Education Department has also said they're going to provide an on-ramp for people who are really struggling to pay. And if you miss a payment or are late with a payment within the first 12 months, they're not going to hold you accountable and send that to credit reporting agencies. So it will not have a negative impact on your credit. And that's going to be significant for a lot of people who are going to say, I'm not going to be ready come October.
Yeah, that's a bit of relief there. So, Sharon, what is your advice for student loan borrowers as they do get ready for these repayments to start up again in a few months? What can they start doing right now?
For all those people who have been avoiding going to studentaid.gov, go to that website. Make sure that the Education Department has your correct information, your current information. Again, it's been 3 years perhaps since you've had to deal with this. You want to make sure if you've moved or something that you have that information with them. Also, your loan servicer may have changed over the last 3 years. So you want to make sure you know who that is. Contact your loan servicer. You also want to apply for an income-driven repayment plan. If you think this will help you make those payments and you're interested in learning more about the SAVE plan, go to studentaid.gov, find out more about it. You can even get an idea of what your loan payment will be. There is a tool on the website that helps you do that. And so you want to try to estimate that and start paying yourself. You know I'm going to say this, Vicki. It's so important to open that high-yield savings account and pretend to make those payments as soon as you can, because in October, they are due.
And Sharon, just very briefly, we have about 20 seconds left here. When we talk about parents and we look at the debt at the end of last year, it was more than $108 billion. So how are parent borrowers going to be impacted by this decision?
Well, parents have only one option in terms of income-driven repayment plans. They can do an income contingent plan, and that requires them to consolidate their loans. That is important to know because it is important caveat.